A few months ago, we referenced some comments by legendary investor Ray Dalio, who said that Fed policy was forcing the US economy into stagflation and that we could expect a pivot of some sorts around 2023. Well, we might be ahead of schedule. Recently, the UK pension industry buckled under the weight of rising rates, and there are tentative signs that similar pressures are building in the US too. And while it might be too early to say that central banks are pivoting, some commentators suspect they're becoming acutely aware of the problems that their solutions are causing. The fallout from the UK bond panic saw the Bank of England start gilt purchases, and yes, we can argue that that was strategic support, but even still, it's a departure from scheduled tightening. And overnight, the Reserve Bank of Australia raised rates at a slower pace than expected by the market. But the bottom line when it comes to central banks is the Fed, and the pivot narrative is starting up again, and it's stoking inflationary pressure. Whether or not they pivot remains to be seen. A wholesale change in belief in a central bank's ability to counter inflation will be at the heart of any decision making. But the US 30-year yield hit 3.9% briefly last week before drawing down to the 3.66% mark we have today. A yield of 3.75% is seen by many as a line in the sand where pressures get out of control and the plunge protection squad might be forced into action. And that's where we are now. Interestingly, a short squeeze seems to be emerging based around the pivot narrative. Buyers are coming into the market with size, and heavily leveraged shorts are being exposed. Buckle up, things might get wild.